All right, so today we'll continue our lesson, and this time we'll be covering income tax. So for this particular topic, we will be determining gross income, adjustable gross income, and taxable income. And from there, we will be finding the federal income tax, and also we'll find the FICA taxes and solve problems involving working teens and taxes. So before we begin, let's have our very important terms first. So when we talk about gross income, which we can represent as GI in our formulas, is talking about all the income for the year. So anything that the person earned for the year, which includes wages, tips, earnings from investments, let's say winnings from game shows, things like that, anything that was earned for the year, that is called a gross income. Now, adjustments, which we will represent as ADJ, these are payments to tax-deferred savings. So anything that you see with the word tax-deferred, this is going to be your keyword to know that that particular amount is an adjustment. And from here, we will be able to find the AGI, or the adjusted gross income. And all we need to do is simply subtract the gross income minus the adjustments. Okay, so whenever we have a tax problem, we always start with the gross income, and then we find the adjustment. Once we have those two values, we subtract them to get the AGI. Now, for us to be able to get the taxable income, there are two other things that we need to remember as well. We have what we call as exemptions, so we will represent a CX. This is a fixed amount for the taxpayer and for each dependent. Now, in reference to this lesson, we are using the 2012 marginal tax rates and stuff. So each taxpayer, each dependent is cost, the exemption amount is $3,800. So if this amount will depend, the number of exemptions will depend on the taxpayer's status and if that person has dependents. So each dependent is worth $3,800. Now, we also have what we call as the deductions. Now, there are two types of deductions when it comes to taxes. We have the standard deduction. This amount is depending on the taxpayer's status. And we have what we call as the itemized deduction. Now, between the two, we can only use one of them when filing for taxes. And to be able to choose which one to use is that whichever amount is higher between the standard and the itemized, that's the one that will show up on the tax papers. So the itemized deductions will include all other taxes that you have already paid for. For example, interest on mortgage, state taxes, property taxes, donations, and then medical expenses. If you have medical expenses exceeding 7.5% of the AGI, that could also be counted as a deduction. And so, given these two definitions, to be able to find the taxable income, we will be subtracting the adjusted gross income by the sum of the exemptions and the deductions. So, as you can see, our operations are pretty easy. It's addition and subtraction, but making sure that you understand the representation of each amount that you will see in the word problem, that is important so that you will be able to get the correct values. All right, let's start with this particular problem. So we have a single man with a wages $46,500, received $1,850 interest from savings account, $15,000 in winnings, television game show, and contributed $2,300 to a tax-deferred savings plan. He is entitled to a personal exemption of $3,800 and a standard deduction of $5,950. The interest on his home mortgage is $6,500, paid $2,100 for property taxes, $1,855 in state taxes, and also he contributed $3,000 to charity. So let's start with the man's gross income. Now, going back to our definitions, all right, the gross income are everything that the man earned. So in this case, we know that $46,500 is included. $46,500 is included. That's the wage. Interest from savings account, it was received, so 1850 is also counted. $15,000 winnings on a television game show, that is also counted as a income. So for us to be able to determine that gross income, we add all those all those three amounts: 46,500 plus 1850 plus 15,000. Sorry, my bad. I don't know what's going on in there. So 15,000. So the total of this amount is going to be 63,350. So that is the gross income. Now, we need to find the adjusted gross income. Now, remember, according to our definition, to find the AGI, we first need the adjustment. And remember, the keyword that you have to look for is tax deferred. So because we have this tax deferred word on our problem, so you can see that 2,300 is a tax deferred savings plan. So 2,300 is our adjustment. And so to find the gross income, AGI, adjusted gross income, it's going to be the GI 63,350 minus the 2,300 adjustment. Okay, and this is going to give us 61,050. All right, so remember, this is GI minus the adjustment. Okay, and our adjustment is the 2,300. Now, to determine the taxable income, the taxable income is going to be equal to the AGI minus the exemption and the deduction together. Okay, so we have the AGI, which is 61,050 minus our exemption. So according to the problem, he is entitled to a personal exemption of 3,800. All right. Now, our deduction, we got two choices. Are we going to use the standard deduction or are we going to use the itemized deduction? Standard deduction is 5,950, okay? But if you will take a look at our itemized deduction, let's use a different color here. The itemized deduction will include the mortgage, the interest on the mortgage, 6,500. The taxes already paid for, 2,100 and 1,855. And again, the charity amount, 3,000. So all four of this, if we add them, so 6,500 plus 2,100 plus 1,855 plus 3,000. This is our itemized deduction. Our itemized deduction is going to be a total of 13,455. Okay? So between the standard deduction 5,950 and the itemized deduction, this is the itemized deduction, this is higher. And so this is the amount that we will include to compute for the taxable income. So this is 13,455. And so solving for the taxable income, if we type this into our calculator, our taxable income will now be 43,795. Okay, so out of the 63,000 that this person is earning, he is only subject to an income tax on the 43,000, on almost the 44,000 that he is able to earn. So that is how we determine the gross income, adjusted, and the taxable income. All right, so let's continue with a second example. So we have here a single woman, no dependents. The gross income is already $62,000. Adjustments, it's already identified as 4,000. The deductions, these are the itemized deductions: 7,500 for mortgage interest, property taxes 2,200, charitable contribution 2,400, medical expenses not covered by the insurance 1,500, and this person will also get a tax credit of 500. Okay, so remember, when solving for the gross adjusted gross income and taxable income, it has to go step by step. We start with the gross income, and according to this problem, it's already identified $62,000. Nothing to add in there. Okay. Next, we need to find the AGI, and for us to be able to do that, we make sure that we subtract the adjustment, which is 4,000, from the 62,000 gross income, which will give us $58,000 as the adjusted gross income. Now, when we work on the taxable income, we have to consider, aside from the AGI, we need to know the exemption. Even though it was not mentioned here, you will always have to include an exemption when solving for the taxable income. Now, because this is a single woman with no dependents, the exemption amount is going to be $3,800. Now, we decide on the deduction. Again, the deduction for a single person is $5,950. That's the standard one. But we have to compare it against the itemized deduction. And as you can see, one of the itemized deduction is more than $5,950 already. So you know that the itemized deduction is the one that we will use. So for the itemized deduction, we will be using $7,500, $2,200, and $2,400. Now you might be wondering, why are we not including the $1,500 medical expense? You have to remember, according to our definition from the first couple of slides, a medical expense is only going to be included as a deduction if it is more than 7.5% of the AGI. So 7.5% of the AGI is around $4,000. So this is not higher than $4,000, so it's not going to be included in the itemized deduction. So now that we have our exemption and the deduction, we can now solve our taxable income. So it is the AGI minus the exemption and the total itemized deduction, which will be $42,100. So again, it's going to be, you got to be patient working on these things because it has to be in steps, and you have to stick with definitions on how you can classify the amounts that you will be seeing in the problem. Thank you.